In this video, I'm gonna cover how to avoid fakeouts, identify confirmed breakouts, and I'm gonna teach you how to trade them professionally. And just before I begin, I want to mention that in the bio of this video, you're gonna find a link for free Discord, free Telegram, also a bootcamp, which is 2 hours long, including a lot of teachings. Now, if you want to go even more in depth, you can join my private network, which at the moment is being unlocked, and you can join before it gets locked up again. This is how much money I made for last month. Made 30k for the month for 16 trading days. So I'm a professional, I know what I'm doing. And even if you don't want to join the private network, there's a free Telegram and a free Discord for daily market analysis and live trading tips. Now first, let's define what is a fake out. A price movement that appears to break key levels but quickly reverses. Now this happens because there's manipulation by big players, right? And also it happens on low volume moves and also impatience between the retail traders. As an example, fake outs lure traders in only to leave them with losses when the market snaps back. That's an example. So in this video, in this screenshot, you can see on this range, we have the range high, we have the range low. You go above it, you have that breakout, you have the fake out, and you come back in. Same thing for the low. You come back down into the low, you sweep the lows, you do a breakout on the low some time frame, which essentially turns into a fake out, and you come back to the range highs. Same thing, you go above the range highs, you come back into the range lows, and you do another fake out. Then you have that final break. In terms of key characteristics, what are they? First, you're gonna have a low volume on the breakout itself. Second, it's gonna be a quick reversal below or above a key level. 3, there's gonna be a lack of follow through. Now, for confirmed breakout, you wanna see high volume, you wanna see follow through candles closing beyond the key level, and also you wanna see a retest of the breakout level, confirming it got turned from a support into resistance or vice versa. So the strategy is to avoid fake outs. First, you need to wait for confirmation. Use the 2 candle rule, so essentially either 2 30-minute candles or 2 1-hour candles to ensure a follow through beyond the breakout level. Second, you're gonna use volume analysis to ensure a breakout move is real. You're gonna have much higher than average volume. There's gonna be trap traders on the other side of the trade, and if it's a fake out to the downside, you wanna see people shorting, so then you can long a reclaim, and it's a break to the upside, you wanna see people longing, so you can short a loss to the level. Then third thing, there's gonna be retests. Look for breakout level to act as a support or resistance after the move. Next, there's gonna be confirmed breakout on the high time frames, so that's why I am looking into daily, 8 hour, 4 hour, 12 hour before acting on the small time frame. Another thing, avoiding trading in low volume markets because fake outs happen during low liquidity times or illiquid assets. Now, examples of fake outs and confirmed breakouts. In this screenshot, you can clearly see this is link on the 1 hour time frame. You had a very clear range highs, range lows. You came into the range lows with increase in the volume, and people were shorting this breakout. And then what happened? We squeezed them up. Right, this is example on PEP on the 8 hour time frame. At the bottom you can see the open interest and also the volume. Clearly you have a range lows, range highs, deviation, mid, top, bottom, bounce, and you start consolidating into the lows. This big increase in the open interest is signifying for me that shorts opening into that key level. And then once you start coming to the upside, you see that open interest decreasing overall. These people get squeezed out, and the volume, these spikes, essentially a lot of interest in the market in this level. In terms of risk management, you want to be using stop losses just below the breakout or below that key level for the fake out. So if you consider this to be the low of the fake out, your stop loss should be below that low. And even with a perfect setup, risk management is gonna ensure that you survive when things don't go as planned, because there's gonna be times when things don't go as planned. In terms of a conclusion, just to give you a recap, fake outs happen when you rush. You need to wait for the confirmation, you need to analyze the volume, and you need to use retests to stay on the right side of the market. And trading is not about catching every move, it's about catching the right ones. So you need to have a good edge in order to survive in the market. I've been in the market for 5 years. I've seen it all. I've seen a lot of things happen. And I can tell you, you need to be in your top level game. That's it from me. Take care.